Hello, everyone. Welcome back to my channel. I'm Marinda, and today I have with me Tony, and he's a succession and estate planner. Hi, Tony.
Hi, thanks for having me. How are you?
I'm so good. Thank you for coming on my channel and to be here and to help my community getting to know better and help them with their taxes, with the tax season, like right here with us. So I think it's like perfect timing to have you here. I have many questions already lined up for you. I hope that you're ready.
As ready as I'll ever be.
Yeah, but first, before we dig deep, we're gonna say hi. If you're here with us, make sure to comment down below and let us know any questions that you may have at any time, and we'll make sure to go in there and answer them. But I already have a lot of questions, a lot to cover, so not to worry. And also, can you just tell us where you're from and like what do you do presently in detail in your own words so that I don't mess it up?
Sure. I don't think you'd mess it up. I'm an estate and succession planner. So although I'm trained as a tax accountant, my focus really is business owners, estate and succession planning, and that includes financial advice, that includes insurance planning and estate planning. And so obviously this pandemic has motivated a lot of people to think about these things. It's motivated a lot of people to think about what happens to me if I get sick, or what happens to me and my family if I'm no longer here. And a lot of this stuff is really fundamentally based on tax as one core component. So if you were to think about, financial and estate planning for a family, you'd think about this circle. And in this circle, there's different pieces in this circle that kind of need to work for everything to match. And so part of that is investment planning. Some of that is retirement planning and wills, but all of these different subsections have a tax impact. And so I think that that's why when I do what I do for a living, having that tax foundation is critical to do a good job for clients. And this is the first time I do an interview without a tie and a suit on, so I feel very informal, and so
I
maybe
love
that
it.
maybe that'll help. I don't know. I got booked for a TV appointment in February, and I don't think I'm going to be wearing the same casual shirt, but for today, it's going to be a casual conversation.
Yes. So we are the special occasion.
You
We
are,
get
yeah.
to
This is
get
the
the
first
full
time.
Tony.
This is
Yeah.
the first time I appear live without suit and tie. So hopefully it'll be a good result. Feel free to ask questions. Tax is such a like fact specific thing that it's hard to give advice, and this is not meant to be advice, but
Mhm.
it's meant to be general information. I
Mhm.
think there's a lot of general concepts that I can speak to that
Mhm.
people can hopefully benefit from, and then you can do your own research, engage your own advisors to do the planning. So if anyone has like very specific, like if you come on and you say, I'm a common law relationship with a stepchild, and my mother-in-law wants to move in, and we want to rent her, like that's a very like specific question, and it would be hard to help that one person on a general live thing like this. Uh,
Mhm.
but more general questions, and hopefully enough information that could help people. Happy to do that.
That's awesome. We're so glad to have you here. And actually, you listening to your introduction, I just have kind of like a side question for you too. Succession and estate planner, because when me as a mother of three, it sounds like 1,000 now because they're
Yeah.
always home. But me as a mother of three, like we've done our will and our power of attorney. We have our like general savings and things like that. But to then get a succession estate planner, who in what situation would they get that, like in what
Yeah, so that's a good question. So and this morning, I can give you a bit of what I was doing this morning. So this
okay.
morning I was on a conference call with one of my estate lawyers and one of my clients, and the purpose of the call this morning was to talk about the benefit of having to take a will and make it a succession plan. It's kind of like describing how you purchased a Tesla recently, right? And so and
Yes.
and so like an estate plan and a succession plan is like a Tesla. It's like a car.
Okay.
A will is like the tires.
Mm-hmm.
So a will is a piece of that car that you need, but a will in itself is not a succession plan or an estate plan. It's a part of it, and it's an important part of it. But this morning we were spending a lot of time talking about, so in the province of Ontario specifically, a business owner that's incorporated benefits a lot from two wills. So not only a personal will for their own personal things, but also a corporate will for the value of the shares that my client has. And it takes time. It takes time to understand why am I recommending that my client have a corporate will or a secondary will in Ontario? And the lawyer, myself, and the client were going through the process of what does that mean? How is it drafted? Why am I doing this? And so that's one example of what it means to have a succession and estate plan. It's every area that's important to a family plan, but more importantly, when you think about share ownership and people that start to create wealth in private companies, it can become very complex in terms of like how does that wealth get left behind for your family.
Yes, yeah, because so then it's a must, just like a will and just like a power of attorney, like
Yeah.
because you see the so then you see a lawyer, you not only have to have the financial advisor, you need a succession estate planner, someone like yourself who specializes in that, and you also need the accountant, and you need all of
Yeah.
that.
And I think that sometimes that like you nailed it on the head there, because sometimes people look at that as a bad thing, and I don't
Mm-hmm.
think it should be looked at as a bad thing, and it's no different from you going to your family doctor.
Mm-hmm.
So if you go to your family doctor and you have a skin condition,
Mm-hmm.
your family doctor is not going to advise you on how to treat your skin condition. You
Mm-hmm.
need to go see a specialist to help you with your skin condition.
Mm-hmm.
And if you have a heart condition, your family doctor is going to send you to go treat your heart. So
Mm-hmm.
no different than like the medical community where you have these different specialties. The same thing happens in the finance and the financial planning community. The one thing I really stay away from is investment planning and creating portfolios. People ask me all the time, you've helped me with these things. Can you also create like a portfolio? And for me,
Mm-hmm.
that's something I completely stay away from. And I have partners that I work with that do that. And some people get a little bit confused. They're like, "Oh, I thought you were gonna do everything," but no, no, no. Like, there's certain specialties that I'd prefer my clients work with to get good
Mm-hmm.
advice.
Mm-hmm. Yeah, exactly. I think I don't think that a lot of people know about succession and estate planner. Am I right? Or
No, I think you're right, and people don't understand the difference from like going in and getting a financial plan and a retirement plan, and how does that really affect them, and how does that really intermingle with their lawyer. It's
mm-hmm.
crazy to me how many people have never introduced their lawyer to their investment or insurance planner, and right, and so you go to these different advisors, but if they're not working as a team, then it would be very hard for you to get advice.
Yeah, like
Uh,
in the States, like every wealthy people have this team that they call in-house, like what is it called again?
So there's about in the United States, family offices and
Oh, family
in-house like
office.
private wealth organizations are very common.
Mm-hmm.
It's not as common here in Canada, even though we try to do it in different
Mm-hmm.
organizations. But yeah, it's something where we lack, and I think part of that is just due to the time. I don't think in Canada, generally speaking, we've had a lot of wealth for many, many years. That's not the case. I think in the US, we've had population and economic size, and there have been wealthy families around for many, many years. And so in
Mm-hmm.
Canada, I think we're starting to catch up.
Mm-hmm.
And I think in the next 50 years, you'll see a lot of that.
Yeah, exactly. So it's like you need to work as a team, and Like just like how like then the doctor again, if you go to your family doctor, they're gonna send you to the heart specialist, to
Yeah,
this and that, and then they all have to look at the same report, like, because they need to
exactly.
know everything.
Exactly. That's the perfect analogy, right? So, like this morning, if I was not part of that conference call with my client and the lawyer, I
Mm-hmm.
would be completely out of the loop now in terms of what my client wants to do with his affairs. And
Mm-hmm.
so, if that's the case, now the next time I'm on the phone with my client, or hopefully soon meet him in person, I'm going to be at a disadvantage. My client is going to be at a disadvantage because now they're starting a process with a lawyer that I'm not involved with. And so
Mm-hmm.
the advice that he's going to get from me next time may be off if I don't know what the lawyer's doing.
Yes, exactly. So super informative. So if any of you have any more question in regards to that, please let us know. And with that being said, I think that the question that I've been gathering a lot in my group has been all around incorporating themselves. Lots of question into that regards. A lot of solopreneur, a lot of entrepreneurs who like are kind of like the one woman or one man show, if
Yeah.
that's what we call it. And is so a lot of them do it themselves, or they would really hire everyone separately, as we just discussed actually. And when would be the time for them to like what is that word again, solo soul
Sole proprietorship
see
versus
oh.
incorporation. Yes.
Exactly. So when is it the time, what are the signs for them to figure it out, like, oh, this is the time that I should, go from there to incorporate it? So if you could just help us on that.
Yeah, I think that that's the basic foundation to like entrepreneurship forums and
Mm-hmm.
people that the number one question that people should be addressing and asking is, should I incorporate myself, and why or why not?
Mm-hmm.
So and tax is important, but tax is not the only answer here.
Mm-hmm.
There's also legal liability issues.
Mm-hmm.
So to incorporate yourself means that you're going to create an entity, you're going to create a taxpayer
Mm-hmm.
that is separate and aside from you personally.
Mm-hmm.
So, what does that mean? That means that all of a sudden you've now created different tax returns that need to be filed. So, you would need to file a corporate tax return and a personal tax return. So far, it sounds like you've created work and fees, right? And
Yes.
so, why would you create yourself work and fees if you don't see an advantage?
Mm-hmm.
So, what are the advantages of having a corporation and separating yourself from your business? Primary advantage number one is not tax related at all, it's actually legal.
Mm-hmm.
And so, if you operate the business separately from yourself, you're now creating a little bit of separation where if you get into financial legal troubles with your business, that corporate shell is separate from you personally.
Mm-hmm.
So there could be an ability for you to have some legal liability protection by incorporating. Now,
Mm-hmm.
that's a general rule of thumb, and depending on your business, the liability could actually pierce through the corporation and come to you personally. But as a
Mm-hmm.
general rule of thumb, the number one reason is legal liability. Number
Mm-hmm.
two, the second reason, which is a tax reason, is if you are incorporated, you would get access to a small business rate. So
Mm-hmm.
that means that the income you earn inside your corporation would be taxed at a much lower rate on the first $500,000 of income as opposed to if you were to earn that income personally.
Mm-hmm.
And so that means that you would have corporate tax deferral. So, which is not necessarily the same thing as tax savings. And there needs to be a clear understanding of tax deferral versus tax savings. So, how does this all make sense in simple English? Simple English, this is what I tell people. If you're going to start making more money than what you need to spend, and you can save more than not, then incorporating makes a lot of sense. So, simple example, if you're going to be making $100,000 a year and you know that you only need $50,000 to live on and you can invest and save the rest, maybe incorporation sounds like the right way to go.
Mm-hmm.
But if you're going to be making 90,000 a year and you're going to be spending 89,000 a year on lifestyle,
Mm-hmm.
then why would you incorporate? Because you can't really benefit from tax deferral.
Mm-hmm.
For you to benefit from this, you need to allow the money to stay inside the corporate chain for it
Mm-hmm.
to grow and compound. So it's those two main reasons that a lot of people look at incorporating: legal liability, number one, and access to the small business tax rate is number two.
Mm-hmm.
But the access to the small business tax rate is only beneficial if you can leave the money in there. And
Mm-hmm.
so if you have three kids at home and if you're buying a new Tesla and you need to access the money, you need to pull the money outside of the corporation. And so if you need to pull the money outside of the corporation, is having the corporation very beneficial to you? So that's kind of rule of thumb, what I would encourage people to consider.
Yes, that's awesome. So, these rule of thumb for the people who already is an entrepreneur for a long time and like now is thinking of incorporating, this rule of thumb will just apply to them like right away. So somebody like that can hear this be like, hey, I do have more money coming in, like I fit the number one. So that is more like of a flag for them to think about visiting that option, not
Yeah,
meaning that's a solution. It's just visit.
yeah. So that's an interesting situation. So the rule of thumb I was speaking to is like people
Mhm.
starting off,
Yes.
people in year two, year three, year one of your
Yes.
business, and if you're making more than what you need. Now, if I
Mm-hmm.
fast forward and I go to somebody that's in business for 10, 15, 20
Mm-hmm.
years, and now that person is in a position that they're much more comfortable than when they started their business,
Mm-hmm. Mm-hmm.
and they're hearing this and they're like, wow, like incorporating sounds right for me.
Yeah.
The rule of thumb still applies. Yeah,
Mm-hmm.
I would still say yes, incorporating makes a lot of sense.
Mm-hmm.
Uh, I would like to add that it would not be as simple to incorporate. You would need to file a tax election with an advisor.
Mm-hmm.
So there's a couple more kind of steps involved. Although the end solution is still appropriate, I still think that incorporating for someone that's in business for 15 years and running a successful business is the right solution. 100%, I think that would be it. But in order to get to that right solution, you would need to file some tax elections to get you there. And so
Mm-hmm.
don't just automatically jump into a corporation. You need to get there, but you would need to get there by filing some tax elections that are really important, um, to put you to set you up properly.
That's really good. So I've had a side conversation with the people in particular who've asked me this question, and it becomes a little bit kind of like maybe now becoming more personal, but like the big thing that people wonder is like, how come my accountant never how come my accountant never suggested to me to even incorporate, like it's not even in the language. So like so my question, like, and how come yours is telling you, like, so I'm like, I don't know. First of all, everyone probably have their style and their way of doing things. And just like when you go see the doctor, they're not going to tell you all of the let's say you have a disease, like they're not going to tell you from A to Z all the possibility option for you to treat that disease. They're going to probably choose the one that makes the most sense or the most popular or whatever. So I was just like, I remember that question really clearly, and I'm like, I wonder what your answer would be to that.
I think that so that question comes up all the time. Um, y- Everyone's fact patterns are very important, right? And so when I'm speaking about these issues, I'm speaking general rules of thumb. So I don't know fact specific about anyone, right? So for me to say this person should do this, I don't have the review to do that.
Mm-hmm.
What I would say is, if the situation leads to, it's a clearly an opportunity that the person should be incorporated,
Mm-hmm.
and the accountant has not brought that up,
Mm-hmm.
um, there could be so many different reasons. It could be the accountant doesn't spend the time with the client to understand really what the client needs. It could be the accountant is not a tax planner. It could be
Mm-hmm.
the account. Not all accountants are tax planners, right?
Mm-hmm.
So there are accountants that are really good at filing personal tax returns, but that doesn't mean you're a tax planner.
Mm-hmm.
So also make sure you understand who you're working with, the professionals you're working with, and the designations that they have. So I
Mm-hmm.
know, like before we were getting on this call, you were like, "Should I read all these designations you have, or how do I do this?"
Yes.
Uh, you know, so look at the professional you're working with and see the education they have. So if you were to look on my website or my profile, you would see I'm a chartered life underwriter, I'm a chartered accountant, certified financial planner. But most importantly, I teaching tax to accountants and lawyers has allowed me to get a really good understanding of Canadian tax. And
Mm-hmm.
so if you're working with an accountant or a bookkeeper and they don't have like the tax planning, ask them if they have tax planners they work with, because unfortunately in our system I think there's a lot of looking back at historical financial information. It comes the end of the year, you come to your accountant, you give them your shoebox of papers and receipts and say, please file my tax return. That's not tax planning, right? That's tax compliance. That's
Mm-hmm.
you being a compliant resident of Canada, filing your annual returns, and I'm sure CRA thanks you, but that's not tax planning, right? And not all accountants are created equal. And so I would encourage people to look at the professionals they're working with and see, have the honest conversation of they can continue to file your tax returns, but maybe sometimes you need to add a tax planner.
Yeah, I think you're absolutely right there because in this journey of entrepreneurship, I have to say that tech is probably my least area that like I'd rather stay on the creative side and just create and do the work. And oh no, I have to go and do my bookkeeping and like, oh, like, and you're right because having the right like tax planning, it shouldn't feel that way. If everything is planned properly, I shouldn't be having this feeling, I guess. So maybe it's a sign for me that I do have to have this tax planning in my system, which like after this interview or even how we opened this up gave me so much information and insight of how one cannot live without each other, and if I plan this right, then this thing would feel much more at ease, and perhaps I will find more pleasure doing it because I understand it. Like, I don't know if you know what I mean.
Yeah, and a lot of what I do is connecting the right professionals to each
Mhm.
other and connecting the right clients to the right professionals. So you also need to have an understanding of like the type of professional that a client may need.
Yes.
And so I don't use my corporate lawyer to do my estate wills, like, and my estate planning and my wills. Like I don't use my estates lawyer to use my corporate law.
Mm-hmm.
So and every family is different, every fact pattern is different, and so depending on who we have listening, if we were to take a very plain vanilla traditional family,
Mm-hmm.
two a husband and wife, couple kids, if the husband and wife both earn $75,000 a year, both are teachers, both are full-time employees, like
Mm-hmm.
the sophisticated tax planning strategies for that plain vanilla family are not appropriate because
Yes.
it just doesn't fit, right? It's like, hey, I like to drive really slow and very conservatively, and I'm going to buy a Ferrari. It
Mm-hmm.
just
Mm-hmm.
just doesn't match, right?
Yes.
Uh, but it's the facts of the family, it's the facts of the situation. Sometimes even one person going from very low income to very high income, or very high income to very low income. So
Mm-hmm.
you take the year of 2020, and I'm working with clients that have been extremely profitable,
Yeah.
and they are in specific industries that have benefited from COVID.
Mm-hmm.
And it's just they don't represent the majority of the population, but there are some businesses that have been positively affected from COVID. And
Mm-hmm.
so that changes their planning going forward.
Mm-hmm.
So the solutions and the strategies for that family this year are different from what I expected last year because their
Mm-hmm.
financial position has changed.
Mm-hmm.
And that should be no different from a regular person who, let's say, had their income completely come down or had their income go up. And
Mm-hmm.
so if you were affected by COVID and your income came way down for 2020, what can you do about that? Like,
Mm-hmm.
and so I would suggest that if you're in a situation where something has happened in the world, and if you personally have been impacted uh, significantly, either up or down, then maybe what you've been doing in the past should change. So let me give you an example, very
Mm-hmm.
simple example. Let's say you, for the last 10 years, have been earning $100,000 a year,
Mm-hmm.
and something happened in 2020, and all of a sudden you're not earning 100,000 a year, you're earning 50,000 a year.
Mm-hmm.
And so that's a significant change because you went from 100,000 to 50,000. And so if over all of these years you've been contributing to your RSP, let's say
Mm-hmm.
every single year you've been putting 15,000 into your RSP, and you've been doing that every single year because you were earning 100,000. Does
Mm-hmm.
that mean you should continue to put in 15,000 even though your income came down to 50? Most
Mm-hmm.
likely not.
Mm-hmm.
And so the advice or the guidance I'm giving people is, if you've had something change significantly, maybe what you were doing before is not the right solution going forward.
Yes, I think so. It's like always like reassessing, and this COVID has been a big discussion too in the group. Meaning like what like exactly the things that you've just said now, but also like is there some rules and some regulation that has changed that could affect the normal filing if people have been filing a certain way? Is there some things that they should kind of like taking a second look at because of what COVID had brought to all of us.
Yeah, so the most common thing right now are the home office expenses.
Mm-hmm.
So, like all of us, we're all working from home, and so if you've been affected by COVID and you are now principally or significantly working from home, there are some tax forms that need to be filed for you to benefit from the deduction.
Mm-hmm.
Now, when you get a deduction, it's that means that you're going to be saving against your income.
Mm-hmm.
Okay, so let's keep that example. Let's say you were earning 100,000 a year, and now I tell you that because of COVID, you have a $10,000 deduction. That means that you bring your $100,000 down to 90 because you
Mm-hmm.
go 100 minus 10, you're at 90.
Mm-hmm.
And in Canada, we have a marginal tax rate system. So
Mm-hmm.
that means that the more income, the higher rate of tax you pay.
Yeah.
So the savings you're going to get to come down from 10 to from 100 to 90 are significant compared to if you were at 50,000 of income and I give you a $10,000 deduction. Your savings there are going to be insignificant compared to bringing you down from 100 to 90 because
Yes.
your tax rates have gone way up. And so
Mm-hmm.
that deduction there at the higher income is a lot more beneficial
Mm-hmm.
for you, the individual and the taxpayer. And so
Mm-hmm.
there are specific forms that have changed for all of this stuff. So in the
Mm-hmm.
past, if you were a regular employee and you wanted to have home office expenses, you
Mm-hmm.
would have needed to use a form called T2200.
Mm-hmm.
So on the form T2200, it would have been a form that would be completed and you would get deductions being an employee working from home.
Mm-hmm.
Because of COVID, that form has received some kind of modifications. And
Mm-hmm.
so there are different forms available that are a lot easier to complete. And you
Mm-hmm.
can easily find those on the CRA website. And I think there are T777S and
Okay.
another form with a T and triple sevens. And these are forms that help you get that deduction.
Yeah, I love how you know all the numbers and then T558. Yeah, so this is amazing. So this is for the people that normally wouldn't be able to file and then sudden like and now because of the situation should be able to file. Now, how about the people that have been already filing? Is there a benefit or there something that changed? And then this is again is general. This is not like, tax advice. It's just like kind of in general talk. So is there something that they should look into? Is there has been any change for those people at all in terms of percentage? Did it go higher? Are they able to? I don't know.
Unless there's been a significant change, I can't think of anything that for people that were already taking advantage of the home office deduction,
Mm-hmm.
I can't think of anything that's changed that
Mm-hmm.
would be even more beneficial to that person.
Okay. Okay. Sounds good. Okay, so those are definitely like the big things right now that people are like wondering about. And we've talked about the incorporated portion. And there's I think one more thing that a couple more things that we wanted to cover. Um, like the unlimited
Uh,
TFSA,
yes.
and like using insurance. Before we get into this specific question, I actually wanted to, because you have like with all the certification that you have and being an estate successor planner, you familiar with insurance,
Yep.
life insurance. A
Yep.
lot of misconception out there, and this is not for me to go into detail. We are not insurance licensed, and we are not like saying anything. But with life insurance, there's this misconception that life insurance is a scam. Like I shouldn't be investing in life insurance, and as simple as that. And the one thing that I've learned along the way of my life and my wisdom is just that everybody's situation is different. And
Yes.
just as you mentioned before, if you are a steady 75,000 income or earner, and your wife, your husband is both of the same, and like you probably might not benefit necessarily from tax saving or planning in that terms, but there are a lot of people who use that vehicle in a
Yes.
certain way. So I don't know into what extent you can just kind of demystify and clarify this little part
Yeah,
for us.
so I am life insurance
Oh,
licensed,
okay.
so
Yay. Thank
I
you.
can speak to these
Thank
things.
you.
So I started my career as a tax accountant, and then really built my career around estate and succession planning, and a big part of that is insurance. And
Okay.
so if you take a look at what's happened in the world, it's brought to the forefront all of these things that are really important to us when we get sick or when we pass away. And there's this like misconception of insurance as a scam.
Mm-hmm.
I think that's wrong. I think there are scam artists. I
Mm-hmm.
think there are people that could be scammers, but insurance itself is not a scam. And so, just like legal advice is and wills are good, but not all lawyers should be writing wills.
Mm-hmm.
so
Yeah, I
so
got
I
it.
think it's not it's understanding the right fit for the client. So life insurance can be used as an investment tool for the appropriate situation, and the appropriate situation is not someone that typically, if the way you could look at insurance is actually a risk protection or like a wealth creator.
Mm-hmm.
So which bucket do you fall in, right? So if you fall into the risk protection category, that means that you need to keep your costs very, very low, and you need to have access to insurance plans when you need them the most, and your cash flow is very hindered, and you need to keep your costs low. That's kind of like risk protection. And
Mm-hmm.
that's when the insurance can come and help you with risk protection. Wealth creator is more of hey, I've used my RSP, I've used my TFSAs. Is there something else out there where I can shelter some of my capital? Can I put capital into something that doesn't pay tax and I can manage and look at my returns?
Mm-hmm.
And so depending on which camp you fall into, there's excellent products in Canada that can help you in either camp. and it's not a scam. It's make sure you don't work with a scammer, and your products could really be very beneficial to you.
Yeah, that's exactly how I feel because, well, first of all, I've done my fair share of like looking around and finding the right person for the right fit to give the right advice, and definitely have gained a lot of understanding throughout the year. And I just wanted to kind of like share that with people in a more legal. I love that you are in licensed because I just wanted to make sure I'm like, can I say this? Can I not say that? You know, like with all the legality, I don't want to get anybody in trouble. And I
Yeah.
absolutely love that you can help us clarify that because I know that a lot of people don't understand and they're just stuck with the stigma, like the whatever it is that they know and hear about, right?
And it's no different from a lot of professions. It's people think that they hear these things and it's like, well, all of this is wrong. So then if insurance was a scam, then we have these large Canadian insurers, the Sun Life, Manulife, Canada
Yeah.
Life, I can go on and on,
Yeah.
that they produce excellent products for people. And
Mhm.
so if the whole industry is a scam, then I don't think that they would be in business. And
Exactly.
what is a scam is sometimes people taking advantage of the consumer, and
Hmm.
sometimes people taking advantage of clients, and that can be a scam. It's the
Yes.
human action of trying to oversell something to somebody.
Yes.
So I love cars. I love just different analogies, right? And
Yes.
so if I go back to that Ferrari and driving slow example, like,
Yeah.
if you love to drive slow and you don't like fancy cars, why would I sell you a Ferrari?
Yeah.
It would make no sense. And so, maybe you need a Honda or a Kia, or just to get you from point A to point B, right? And
Yes.
so are Hondas and Kias bad cars? No. They do a job. And so
Mhm.
is a Ferrari a bad car?
Yeah.
No, it does a different job.
Yeah.
So, and it's like the fundamentals of planning and financial planning for people. You have to diagnose what they need, what they want.
Yes.
Whereas if I meet someone that they're maximizing their TFSAs, they've used RRSPs or don't really like RRSPs because of the tax impact of pulling the money out, and they're talking to me about alternative investment strategies.
Hmm.
Now I'm more towards using insurance as an asset and as
Hmm.
an investment. And I love walking clients through the fact that you could actually use life insurance as an investment during your lifetime, because
Hmm.
people believe life insurance only pays out when you die,
Hmm.
which is not necessarily the case. So there
Hmm.
are some products that only pay out when you die, but you could actually use them as an investment tool that you can access in your retirement.
I love the analogy. Like I'm very creative. So as you're actually explaining it, I'm actually seeing it in my head. So hopefully it's helping a lot of people with the analogy that you use. And may I add an analogy to yours?
Sure.
So not only what you want and what you need, but what can you handle as well? Because my husband wanted an Audi and he took me to a test drive session and I thought I was gonna vomit. Sorry. I'm like, I was just like, it was so not balanced. And I was just like, I don't know if like if you have this car, if I would even like go into the car with you. Like he was having so much fun and I was just like,
Yeah.
ooh, ooh, like, So it's the same thing with like life insurance with anything that you do buy what you understand and what you can handle financially. So yeah, so that's kind of like my 5 cents.
Yeah, and that's where the scam can come in, right?
Mhm.
It's that I always talk about this to like so many people. I'm very passionate about this. It's my field of study. I'm very like I could talk about this for 12 hours a day. So I'm not like a really fun date because my specialties are like death, taxes, and insurance. And so I'm not really fun to take out on a date, but
But
that's
it
I
is fun. It's
for
fun to
me,
hear
it's yeah.
your passion though. It's
Yeah.
really like I said, it's not my area of expertise, but I love listening to you. I would probably listen to you for 12 hours. So you would be a fun date to me. So don't
Yeah.
don't think that the passion shows when you're explaining it. So I
Yeah,
love it.
we work in a system where there's a lot of like general guidance, and sometimes
Mhm.
that comes through with like mass selling, and
Mhm.
so when you start mass selling, I always tell people like I don't run a Walmart, and when you think about Walmart, you're like, oh, it's a great store.
Mm,
Absolutely, I shop at Walmart.
mm,
But I don't. So and you go to Walmart for your everyday needs, right?
mm.
And you can find lots of things there. But
Too many things.
right. And so, but sometimes you need very specific advice, and sometimes you need that estate and succession and insurance plan,
Mm-hmm.
and that's not like off the shelf, right? That's
Mm-hmm.
not something you just buy off the shelf. It takes time to create and customize.
Mm-hmm.
But these things for me are very, very fascinating when you can empower somebody's like financial wealth and for their
Yes.
families, for themselves. And I always love like the reaction that I get from clients when I show them like this is the power of good planning, when
Mm-hmm.
when you can use life insurance during your retirement and you can live off of that and still leave an inheritance for your kids. And if you follow this roadmap, then you're going to be okay this way, right? And but you need to have a roadmap. I can't just say go do this because I don't know anything about you, right?
No, yeah, it actually it's so exciting, and I'm like I want to see what one looks like, because I love what you just said right now, like because a lot of people don't understand the power of that. And I just had a guest last week. We were just talking about like losing our fathers, like both of us like connected because we've gone through the unfortunately the same type of experience. But the difference between the two of us is that my dad was unexpected, and it was like a shock.
Yeah,
And for him, I mean, it's always a shock. But for him, his dad was a terminal illness, and kind of like living for the 2 years feeling like it's today the day, like that
yeah,
feeling. And his dad maybe having that roadmap, the planning that he'd done, and knowing exactly what he could do, and while he's still alive he was able to use that money and buy himself a land where he's gonna bury, like not him himself bury himself, but like where he's gonna be
yeah,
buried. And he goes, you know what, I'm going to splurge and I'm gonna buy a bigger land, and I'm gonna get it for your mom too. And I'm actually going to be sharing the wealth like right now. Like I want to see you guys do something with it,
yeah.
and not wait. And that to me was so powerful. And I would love for you to elaborate on that if it's possible, just kind of like how is it, as an example analogy, that someone can actually do that.
Yeah, so there's this whole like wealth planning can happen at any point, and you can distribute your wealth during your lifetime or after you pass away. The conversations around this stuff happen all the time with charitable planning.
Mm-hmm.
So just had a call today about giving to charities. And some people want to give to charities when they pass away, and some people want to give to charities while they're alive.
Mm-hmm.
And charitable planning is like a huge kind of box of different options that you have. Did you know that you can give to charity your life insurance?
Yes, I did.
Yeah, not a lot of people know that, right? Did you know that you can give charity some of your stock portfolio?
um I didn't know that. but
Yeah,
but
so
I would imagine if I can give my money, I can give anything to charity. I've had
so
I've hear story where the family is kind of mad because they didn't get it and charity got
yes, and this is the roadmap, right? Like, how do I create this roadmap if I don't know what you want or what you need or what you can handle? And some people want to give to charity during their lifetime, some want to give to charity upon death. And it's how do you give? What's the most tax efficient way to give?
it. Mm-hmm.
If you're going to give to charity, and if an advisor or a me can create a tax benefit for you, I mean, it seems like it's a win-win for the
Mm-hmm.
charity and for you.
Mm-hmm.
And so it meets your intentions to giving, and it helps the charity and gives you a tax benefit as well. And these are the things that like need to be thought of and discussed before it's unfortunately too late. And just like that example of like funeral arrangements, and all
Mm-hmm.
these things can be in your will in terms of like how you want things to happen when you're gone, right? Maybe you want your wife or your spouse to receive everything right away. Maybe you want some trusts set up.
Mm-hmm.
What does that look like, and why would that be beneficial for you?
Mm-hmm. Exactly. And uh, hi, by the way. I told you this might happen. This is what happens when you work from
Work from
home
home.
and your baby is watching your baby. Um, I wanted you to maybe give an example of someone that didn't like, what are the risks of not having a good planning that could happen? Because all of this is with good planning. If you don't do the right planning, then the government will will get everything, and I just want to know
Yeah.
what.
So you could actually die in something called intestate.
Mm-hmm,
So when you pass away in Ontario without a will, you fall into this law that's called like intestate, which
mm-hmm,
means that there's like an automatic government schedule of how your estate is going to be handled. And
mm-hmm,
so only if you have beneficiaries that want to contest this,
mm-hmm,
could they actually contest it. So
mm-hmm.
if you don't do any planning, you could be paying tax liabilities upon death. You can be paying probate fees upon death. I'll give you a real life example.
Yes.
I had a family come into my office, and they came into my office because they were really upset that they were paying probate fees when dad passed away.
Mm-hmm,
Okay, so probate is a tax that you have to pay in Ontario when you pass away on the
mm-hmm.
value of your assets when you pass away.
Okay.
So there are some exceptions, but generally, when you pass away, you have to pay probate fees on
Mm-hmm,
your assets.
mm-hmm,
And this family was really upset because they had to write a check after dad passed away of $150,000 for the Ontario government.
mm-hmm.
And this was the probate fee that was charged on his estate.
Yes.
And they came into my office and they were really upset because they had to pay $150,000. Dad passed away and they didn't receive anything. He just had a bunch of rental properties. Like
Oh.
they wanted to keep the rental properties. Dad had a bunch of rental properties and now they had to pay 150,000.
Mm-hmm.
Little did they know that when mom were to pass away, that they were going to have a $3 million tax problem. And plus they were going to have more probate fees that they were going to have to pay of another 150,000 or more.
Mm-hmm.
So, I mean, be mindful that this is not your average family with only one home. This was a family with multiple rental properties.
Mm-hmm.
But this gives you a real life example where people became upset because they had to write a check for $150,000 when they received nothing except for rental properties.
Mm-hmm.
And they had no idea that there was a $3 million tax problem that was coming up when mom were to pass away.
Oh my God. How
And,
did they
and
find out all of this? When they came visit you?
yeah,
They met?
when after we work, yeah, after we work together. So
Oh,
these are things that happen. Again, is it a big problem for someone that is earning a regular income with one house? No. I mean,
yes.
it's a pretty plain vanilla situation
Mm-hmm.
for some people, and for other people, it could be very costly and expensive.
But yeah, so exactly. But sometimes though, some people think that their own situation is plain vanilla, but then it's not, right?
Yeah,
So how
yeah,
can we ignite this to these people that maybe think that, oh, mine is very simple, but really it's not? Because even with my dad's situation, which I told you is it
yeah.
was unexpected, um, we we fall into that same rules, but for the Quebec side.
Mhm.
Quebec is in Canada as well for the viewers who are in the US, but they have their own rules and their own law, and it's very, very different from Ontario. And it was a little bit like a little bit complicated, like our
Yeah,
situation didn't seem to be a complicated one, but we are like my parents are immigrants, and there's certain papers and there's certain things that they didn't have filled out or done properly in order for things to be smoother, let's just say.
yes.
So what can we say for those of them, kind of same sort of boat, to kind of just maybe to revisit, it might not be as simple as you think.
Yeah, and think about like what could potentially make you a little bit different, or like take a cottage, for example.
Mm,
So the number one thing that I see from clients that think that they have a simple situation
mm-hmm,
is the Muskoka cottage, or a cottage outside of Toronto, for anyone listening. Like
mm-hmm,
you have your home in Toronto or in your primary city, and then you go buy a cottage and you think it's super easy and there's nothing to it.
mm-hmm,
Very, very wrong perception that there's nothing to it. So upon death, the cottage is going to be taxable, maybe.
mm-hmm, mm-hmm,
And if an asset is only owned in one name, how do we get it into another person's name?
mm-hmm,
There was this very popular story not long ago in terms of a widow who lost her husband, and she couldn't get access to his car. Like
mm-hmm.
the car ownership was in his name, not her name, and then they couldn't pass the ownership of the car from him to her after he was passed away, and she couldn't drive the car because she didn't have the legal authority to drive his car.
Mm,
So like you said, sometimes people think, "Oh, I'm in a very simple situation," but like
mm-hmm,
sometimes even very simple situations can be quite complex.
mm-hmm,
So it can vary, right? Like from one client to another. It could. I always look at personal and financial things that make your situation a little bit unique. So personal things that make your situation a little bit unique. Do you have any disabilities in the family?
mm-hmm,
So either mental disability, physical disability that makes your situation unique. Do you
mm-hmm,
have anybody living outside of your province?
mm-hmm.
Anybody living outside of your country? That makes your situation a
Yeah.
little bit unique. Do you have multiple marriages, or kids from other marriages that are part of your family dynamic? Makes your situation unique. So these are like personal things that make your planning a little bit unique. And then you have the financial things that make your planning a little bit unique. So do you have
Mm-hmm,
real estate assets? Do you have investments? Do you have outside of your pensions and your home?
mm-hmm. And then, so basically, the simple is really, there's really like that one scenario that is simple. And
Yeah,
as soon as you don't fit the simple, you're unique.
yeah,
So,
pretty much.
right?
If you were to think about like everything that happens, and today in Canada, Bell Let's Talk Day. So it's a day focused on awareness of mental health and
Yes.
addiction. And so you look at percentages of divorces and separations, you look at percentages of people with mental health issues. I mean, you're right. Like basically everyone is going to be unique. Like
Yes.
it's like very few people that fall into that very plain vanilla situation.
Yeah, it's this new age. It's like it's like as soon as this, back in the days, people were one job for the rest of their life, and as soon as this regular thing changed, that means that most of the situation would be unique,
A
right?
100%, you got it. So if you were to look at back in the day, you would be like, husband goes to work, wife stays home, like
Mm-hmm.
it's one family unit,
Yeah.
it's all the kids are from the two, and you raise everybody on that property, and you stay with the same employer for 35 years. And so all of these things that make that back in the day situation so common 50 years ago is no longer applicable.
Yes,
Now you have
exactly.
like multiple relationships, multiple kids from different situations. Like all of these things now make planning more complex. And
Yeah.
so if something were to happen, if you were to get sick or disabled, or if you were to pass away, what's going to happen not only to you, but to your stuff?
Um, just a question, like in regards to what we just said too, and with COVID, did COVID change any of this like make the situation more complicated than it should be? Like in the sense of if they go unexpected, or like with all this health regulation with life insurance and things like that, does it affect it a little bit, or
So yes, it
what can
affected
we
it.
say?
It affected it for sure. It's just we don't know. So I was just talking to a lot of people in the insurance industry a couple days ago in terms of what's going to be the impact of this. We don't fully know that yet. Like
Mm-hmm,
we're
mm-hmm,
expecting prices could change
mm-hmm,
because of the impact of COVID.
Mm-hmm.
But this is a huge unknown factor for right
Yeah.
now.
Mm-hmm.
Um, it'll impact the insurance industry for sure.
Yeah, that's like what I was curious about, and I wasn't sure. I'm like, how can I ask this, and how can he answer me? But I'm happy with how this went. So thank you for even addressing that. And I think, oh my God, like time is flying by. But I really wanted to touch base on what you said about the TFSA, like part.
Yeah, so people when some people really like TFSAs and some people have a problem with the limits on TFSAs.
Yeah.
And when you're looking for planning that's above and beyond the TFSA limit, you could really create for yourself an unlimited kind of TFSA using an insurance plan that could
Mm-hmm.
really be beneficial for you. So if you fall into that category, you could definitely consider this as a planning tool.
Mm-hmm.
It's not for everyone, but for a certain people, it could be very, very beneficial. Just think about investing money without paying tax on the growth. And it's a good long term strategy. And it's definitely something that people could use for their benefit.
Yes. And again, it's a strategy. So not it's just like I wanted to enhance on that because a lot of people are just too quick to judge or to close that idea. But it's just like any type of strategy, marketing strategy or whatever strategy, like getting a date strategy. Not all strategy fits with
Yes.
everyone. So, this is a strategy that you would look at again if it fits your situation. So I love that just implanting the seed and then go on and do your research.
Yeah, it's just like I recommend a lot of primary and secondary wills for people in Ontario. So for
Mm-hmm.
people in Ontario, a great strategy is having two wills. If
Mm-hmm.
you're a business owner or if you have like a collection of jewelry or and so is it the right strategy for everybody? Nope. But
Mm-hmm.
for certain people, if it fits the bill, it'll be an excellent strategy. And it's
Yes.
just like all the tax planning you look at. People always talk about trust planning, like family trusts, and is it a good strategy? Depends on your situation, right? So
Mm-hmm.
if
Mm-hmm.
your situation fits that bill, you're going to really benefit from trust planning.
Mm-hmm.
But if you don't fall into that category, then the trust planning is going to be a waste of time and money for yourself.
Yes, exactly. And I think lastly, I think we talked a lot about corporation and things like that. And I know that many people have many corporation. People are struggling with even opening one, but some people have like, oh, I have like five. I have like five different numbers. But why? Like, so why do you have five different numbers? And
Yeah, so I've met all kinds. I think I once met somebody that had like 20 corporations, and don't get me wrong, like I've met clients that justified 20 corporations, but this client did not justify 20 corporations. And it's I go back to the very basic principles. So if you take anything away from this conversation, other than me not being in a suit and a tie, take away that if you incorporate, there are two main benefits. There's a legal liability benefit and a tax benefit when you access small business rights.
mm-hmm,
Sometimes, if you want to individually protect assets in different corporations, it could make sense for you to have all of these different corporations. So, quick example as we're running out of time is
mm-hmm,
if we have two commercial real estate plazas,
mm-hmm,
and if a customer comes in and falls at one and wants to sue you for that
mm-hmm,
liability, if one corporation owns both of those commercial real estate plazas, maybe now you're in trouble at both.
mm-hmm.
But if you have those two commercial real estate plazas in two different corporations and somebody gets hurt at one of those, you've now protected this one over here that's not in that corporation. So it's again very fact driven. Sometimes people go way above and beyond where they don't need it, and sometimes it's really worthwhile.
Wow, that's a perfect analogy and explained it in the really short amount of time. I'm actually impressed. You did that in 1 minute. I'm like, how is he gonna answer my question and like just close it off nicely? You know what? This has been so informative and I love our session. I really hope that I've answered all of the group's question as a whole because there has been, like without getting into picky of everybody's situation because
Yeah.
that's what not what we're doing, but hopefully give you enough information for you to think about and to attack this tax season
Yes.
with strength. And if you guys want to know more about what Tony does and have his information and get in touch with him, all the information will be in the description box below. And don't forget to leave us a like and join my Max Efficient Facebook group because it's a community of entrepreneur helping other entrepreneur. And of course, subscribe to my YouTube channel so I can fall into the really like minimal, unique situation where I'm
Yes.
gonna go and see Tony, be like, Tony, you gotta help me. So, with that being said, Tony, it's been such a pleasure. And I wanted to ask you one thing. You said that you're going to be in suit and tie for a certain particular event. When is that event? Where is it? We want to go see
Uh,
you.
that's an excellent question. So I'm a regular guest speaker on BNN, and
Mm.
so I'll be live on BNN, I think in 2 weeks, middle of February. So you can definitely Google me and see all of my TV appearances when I'm actually in a suit and tie.
Yeah.
I appear regularly on BNN, and I have podcasts on advisor.ca,
Oh.
and last name is spelled Salgado, Salgado, and I'm really passionate about what I do. So thank you for having me on.
Yes, I would love to have you over again, maybe one day. Let me know if you'll be open to it. And I'm gonna put your podcast, the BNN. I'm gonna link it. I'm gonna Google it. I'm gonna do the work, guys, and I'm going to put it in the description box below so that you guys can find Tony. So thank you so much,
Thank
Tony.
you.
Such a pleasure. Thanks, you
Thanks.
guys. Bye.